Hello, my name is Fred Amron and welcome to Student Loan Repayment. Today's topic is Income Based Repayment, or IBR. This program is being sponsored by Repay 411, a company that specializes in student loan repayment, loan forgiveness, and loan consolidation. We bring the whole process together for you. Let's begin. Reasons why you need to consider IBR, there's a few different ones. One, if you have really high student loan debt, and this would be just for your federal loans, this is a great option for you. Other reasons to consider are if you are currently underemployed or unemployed, which is the occurrence due to the current economy. This solution will keep you current so you don't run into default on your student loans. That will save the way your credit and a few other things there. It also is one of the methods to qualify for loan forgiveness. So if you are working for a government agency or for a nonprofit, this is highly recommended as one of the solutions you need to consider. And it is based on your income, so if you do have the high debt in combination with low income, this is a great solution for you. So what are the factors that are in the calculation for IBR, or income-based repayment? One, it only handles your federal student loans. Again, looking at some of the other videos that we have, you really should consider the direct consolidation, because if it's not a direct loan, you don't qualify for the Public Service Loan Forgiveness Program. It's based on your current income or your current tax return. So when you qualify for your loan repayment, you need to look at what your current income is. This will have an impact on your monthly payment. It is something that's reviewed each year, but it can be beneficial to apply certain times of the year since your tax return will be used versus your current income. There is a few additional forms that may need to be completed, such as the alternative income verification process if it's not within reason of the current tax return you filed. Also, your tax filing status and the number of dependents are a factor since it does use the poverty level. This is an important part. Also, if you are married, IBR can be a great option for you, especially if one doesn't have student loan and one does. You need to review some issues on other tax issues such as the alternative minimum tax, but this process, or IBR, is one of the only programs that qualifies you to file separate, and your income will be only reviewed for your monthly repayment. Unlike some of the other processes, it will look at both incomes. So this is a great option for you if you're married. Again, it does factor in the poverty level that will change each year, and then your career path. So as I said earlier, if you're working for a government agency or for a nonprofit and you know you're going to stay in that type of arena or career path, this is one of the few repayment processes that allows you to qualify for the Public Service Loan Forgiveness Program. That means your loans will be forgiven after 10 years or 120 on-time payments. So again, this is a great option to consider. What are the other details within IBR that you need to be aware of? One, you need to submit this each year. Again, if you consolidate your loans, it does make the process a lot simpler. We highly recommend you do that. But again, this is a variable amount and will be based off your current income each year. Where this becomes a problem is if you get a significant increase or your career path, such as maybe a doctor, or you are making, while you're in your residency, not a lot of money, and then you graduate and all of a sudden your income goes up substantially. This could have an impact on what you're going to be paying monthly on your current budget. So it does have some flexibilities. It does have some advantages. Or if you get a one-time bonus, again, these things will be factored in. As I said earlier, it is one of the few repayment programs that qualifies for loan forgiveness. And if you do have a change in your marital filing status, so if you do get married, again, this program does offer a lot of benefits. The one disadvantage of the program is it has a thing called negative amortization. And what negative amortization is the increase in loan debt over time. So as an example, in the early stages, if maybe you're underemployed or you're unemployed and your IBR payment could be zero actually, during that time frame, depending on your mix of loans, your loan balance could actually go up. Now, again, some of this could be a cash flow decision, but if you qualify for the loan forgiveness option, then it's not a big concern. But you need to realize that this loan method or this repayment method could add additional debt onto your loan since you're not covering the full interest charge of the loan as it exists during your time of lower income. So what are your next steps you need to do? One, you need to understand what your options are. And that's one of the things we do here at Repay 411. We lay out your different options. Every person has different goals and different objectives when they're looking at how to repay these student loans back the best way. You need to understand both the short and long-term strategy. So is it a big deal if you have negative amortization, as we just described, when you're going to have loan forgiveness because you're working in a nonprofit environment? These are things you need to understand and what the impact will be, not just in the short term, having a low payment, but also what is the long-term debt structure of your student loan repayment. What's the nice thing too is with the flexibility with IBR, if you have some private loans, you can kind of mix and match these together to create a manageable repayment process. This is an important thing to realize. Another important aspect is the timing of your application. In most cases, they like using your most current income tax statement, and that's when it will be reviewed each year. But if that is not recent, they'll need your current pay stub. So that's an important part of this process that you need to also consider. And again, one of the things we do recommend is that you do the direct consolidation. That will simplify this process. If you can keep the loan separate, and in some cases that may be applicable, but if you do use the IBR method, you're going to have to reconnect with each one of your servicers to notify them of the IBR decision that you're making across the multiple loans. So it's a lot more work, and once you do the student loan consolidation, and again under the direct program, it will really minimize the amount of risk you have on default and also the amount of work required to maintain the IBR status. We hope you found this program informational. I hope you found this program helpful. If you feel you need professional advice, please contact us. And if you need some more additional detailed information, please visit our resource library. There's a group of additional videos and information that you may find helpful. Thank you, and have a great day.